Hello, everyone. So I think we can start now. I think the numbers improve. Good morning once again. This is Emmanuel reaching you from the beautiful city of Port Harcourt, and this is our morning market review. So we do this particular analysis every morning, 8 a.m. to 9 a.m., where we try to give you tips and tricks how to navigate the market profitably. We also give you reviews and previews of what the market has done, such that you're always well guided in trading. Okay. All right. I want to believe you can hear me. A little sound check here, please. Chat room. Let me know if you can hear me, please. Okay. Can you hear me? Traders, can you hear me? Okay, thank you very much. Loud and clear. Really appreciate that response. So just like we always do, our custom here, we just try to go through um, fundamental analysis, and after that, we look at technical analysis, okay? So let me share my screen very quick, okay? So guys, I've been able to share my screen. Check if you can see my screen. I've shared my screen. We are on Forex Factory here. So website you can use for fundamentals include Forex Factory. They can also use www.investing.com. You can also use fsstreet.com, right? So just in case you have not checked these ones out, please, after this call, just try and check them out. You can also use my Facebook, right? My Facebook. So there are several websites. You can even go to Bloomberg, okay? All right, guys. But among all of these websites, to make life simplify, make life easy for most new traders, we like to use the Forex Factory, right? So this is Forex Factory. So once you open this website, it shows you the calendar or the news event for that particular day, right? Now, for you to see the news event for the whole of the week, which I always do, I'll just click on this word up here. I'll just click on this word up here, and it's called calendar, okay? So by clicking on calendar, you're going to see the calendar by the top left, right? Then, of course, you can choose which of the week you want to view, okay? So this is this week, July, right? I think this is the fourth week of the month of July, and this is Friday, and this is Friday, the 26th, blessed day of the Lord. All right, guys, all of this red news has come and gone. I want to believe you got into them positively, or they affected your trade, or they affected your account positively, not negatively. Even if sometimes can be negatively, but then you should always have stop loss and take profit, and always position yourself in such a way that you're always coming out in net profit, okay? So the trade hitting your stop loss, most persons don't like it. Of course, I don't equally like it. But then you cannot do without it, okay? You cannot do without it. So you position yourself in such a way that your stop loss is always a small amount. Your stop loss is always a small amount. Then, of course, your take profit uh, is something that will be bigger, okay? So what we try to do here is we run through the analysis. Then after 2 to 3 analysis, right, then we can now, after 2 to 3 instruments, then we can now look at the chat room and, of course, take questions, okay? So let's try and follow that, okay? So this is today being Friday, as you can see. Those of us joining us for the first time, we're always having newbies joining us for the first time, which is a good thing. It shows that we're impacting our society, okay, positive in Rally Academy. So I forgot to mention, we're also streaming live on YouTube. So that means if you miss anything, and also recording it live, okay? So if you miss anything or if I'm too fast, you can get back to YouTube, Rally Trade on YouTube, and of course, watch the game for yourself, guys. So this is Friday, 26th of July. As you can see, these are the news events, the fundamental event, the macro events for this day, right? So those of us joining for the first time, our attention is mostly on the red flag here, right? It's called red impact, or if you like, high impact, right? So impact is another word for volatility, volatility. So if you like, you can call it high volatility. So volatility is simply the rate of change of price with time. So that means if it is high, it means the price will move really very fast. And of course, most times it sets the new pace for the new direction of the market. Okay. Now the brown one are medium impact, right? Medium impact. So for today, being Friday, the last trading day of the week for day traders. So by 1:30 p.m. Nigerian time, we have a high impact news, as you can see, right? So this high impact news is on PCE, right? PCE price index. And of course, this is M/M, which means month or month. So that means this particular news event is released for us every month, okay? You don't want to sleep on this one, okay? Now, what's PCE? PCE is simply another version of CPI. So CPI is Consumer Price Index, right? Of course, we know it's a primary gauge of inflation. So that's one of the tools central bankers they use to gauge or to know or to measure, right? Just like Ibaba has its own tools called Clipper, Scissors, and the rest. Now, in the hands of central bankers, I mean, like the Federal Reserve, let's go direct now. This is from the US. So the hands of the Federal Reserve, or if you like, the governor of the Federal Reserve is Jerome Powell. So in the hands of Jerome Powell, one of the tools they normally look at, or if you like, one of the indicators they normally look at to know if the economy is diving into, if inflation is increasing or if inflation is decreasing, that information they can use to cut interest rate, to hold interest rate. So one of the tools is CPI. Another of the two is PCE. So PCE means personal consumption expenditure, right? So, but then since CPI comes out before PCE, CPI seems to take most of the glory, if you understand what I mean. The glory I mentioned, I mean here now, I'm talking about the volatility, okay? So CPI seems to attract most of the volatility. Now, PC is released somewhere around 10, 11, 12 days after CPI. Now, the reason why I'm referencing CPI is because CPI is very popular in this industry. And of course, that is where we like to trade, okay? So now you can now equally trade this one, okay? So I've referenced CPI very well, and CPI moves very well, okay? CPI is almost dragging the place of NFP, okay? So CPI moves very well. So since CPI moves very well, of course, you can tell that PC will also move, okay? But not as much as CPI. So, but it all depends. Now, then, of course, I want to believe you were able to get value from that explanation, okay? All right, so as usual, we normally look out for the actual. So the actual will be out by 1:30 p.m. So if the actual seems to be greater than forecast, is good. Okay, so please by 1:30 you want to trade this news. Okay, so now let's leave for fundamentals. Now you understand it very well. By 1:30 you're going to be trading this. So one of the easiest way you can trade this is to use the straddle method. Okay, that will be a buy stop and a sell stop. I want to believe you understand that. For those of us newbies, if you don't understand how to set it, from now to that time, you can learn how to set buy stop and sell stop. Okay, there are videos online. There are videos I can recommend for you. Right, if you go straight to our YouTube channel, Rally Trade, you can get it all after this event, after this call. you can chat me up. I'll drop my number. I'll give you videos that you can watch how to set buy stop and sell stop. Okay, I think we are good here. So you just do a buy stop maybe around 120. The news by 130. Do a buy stop on all of the USD currency pair. Example would be GP USD, Euro USD, USD JPY. You just do a buy stop, and that buy stop will just be maybe 10 pips from the current market price. And of course, you do a sell stop 10 pips away from the current market price. Make sure you have stop loss. And of course, you also have take profit, okay? So by the time of the event, by 1:30, just sit still on your system, on your phone, and you're watching it, right? So if it comes with high volatility, of course, it will pick the buy stop or the sell stop and head straight to your take profit, okay? That's how we trade this. And of course, 80% of the time, it plays out like that, okay? Not 100%, guys, 80%. So that depends on the amount of volatility that is infused into the currency pair by that particular time. Okay. So I want to believe we're making good progress. So I think then the rest of the news we have are just medium volatility. So we have the G20 meeting. Okay. That's all day. It started yesterday. Today is day 2. Okay. That one is medium volatility. Okay. Even though it's all day, okay, the effect can come at any time. It all depends on what reporters are telling the press after the meeting, okay? So the meeting is closed to the press, but then after the meeting, those that engage in the meeting will have to maybe brief the press what was discussed, the policies that was discussed, and all of that. So that alone can trigger some movement on the market, but we don't know when. So that's all this. So just make sure you have stop loss and take profit on your trade. Then, of course, we have University of Michigan. That's the UOM, University of Michigan Consumer Sentiment. So there's also a consumer sentiment today, but that's local, right? It's local to University of Michigan. So that's why it's on medium volatility, okay? Now, that can also trigger some level of volatility because consumer sentiment, or if you like consumer spending, is one of the major driver of the economy, okay? Consumers having money to spend, right? If they don't have money to spend, it should the economy is somehow down or low. Of course, if inflation is rocking the economy on the highest, I mean hyperinflation, of course, it will affect consumer spending. Okay, so guys, you understand this stuff now. Don't deny me, you understand what I've explained. So please, to summarize this before I will leave to technical analysis, okay, by 1:30, please, by 1:30, don't say you don't know or I forgot. No, you set an alarm, okay? By 1:30, US will be rocking our charts, okay? And of course, it will rock it towards the good side of things. So guys, let me switch to technical analysis now. So I think you said the challenge of penny order is high slippage. Okay. Now slippage normally occurs. I'm just reading from the chart now. Slippage normally occurs in during high volatility movement on the market. Okay. So sometimes it's high, sometimes it's low. Okay. So you just want to protect yourself with stop loss and take profit. That will help you. So let me start from USD index. So that's our custom is. We always start from the USD index. So analyzing the dollar will give you a heads up, it will give you an idea of what is happening to the dollar. So most of our trades are around the dollar. You will not deny that, right? So even if you are trading gold, you're trading oil, you're trading currency pair, most of our trade, 70%, 80% of our trade right now, or the instrument we wish to trade, right? They are just around the dollar. So guys, I've been able to share my screen. You can see my screen, right? You can see my screen. So please, if you can see my screen, this is chat. Please just type chat in the chat room. That will work for me. Just type chat, please. You can see my screen. All right, that's good. Okay, you can see my screen. So let's do USD index really quick. So this is the analysis on USD index. So this is on H4 time frame, right? So you can see my screen. This is on H4 time frame. What's happening to our precious dollar, right? So dollar has been nosediving for some time now, as you can see on the chart. Remember, you trade what you see on the chart. Now, you can add sentiment to your trading, of course. Sentiment may include what the news is telling, what the general, what you hear on Bloomberg, or what the between Biden and Trump, Biden have stepped down. Of course, that's also sentiment. Sentiment can include what your friend is trading, all of that is sentiment. But then, after all of that gibberish, you would want to look at what the chart is telling you, okay? Because the chart does not lie, okay? So the charts represent the true conditions or the true scenario of what is happening in the market. So as you can see here, quickly, we're trading the market to the downside. As you can see, we're rocking USD index to the downside. By that, I mean we're breaking structures to the downside. Now, this is structural. This is market structure analysis, okay? So you'll be hearing the word structure. Okay? Structure is simply built by the highs and the lows of the market. And of course, the highs and the lows is just what I've painted out for you here, the highs and the lows. So the highs and the lows are the most important area on your chart. If you like, they are the liquidity trap or the liquidity point on the market, okay? The highs and the lows. So the market normally drives towards, or the market is attracted towards the highs and the lows. Hence, we call it the market structure. So if the market trade below or above the highs and the lows, we call that a break of structure, okay? So you may want to write it down. The market trading above the highs or below the lows, we call that what? A break of structure, okay? So we have break of structure to the downside here. So that's the sign of momentum downward, right? Momentum to the downside. We have another break of structure here, momentum to the downside. Then, of course, now, if we are breaking structure to the downside, you remember, so if you watch carefully, you see that the highs are being protected. So if we are breaking structures to the downside, it means the highs are being protected. The highs are being protected. Now, for the first time the highs is taken out, for the first time the highs is taken out, we call that a market structure shift, okay? So let's see, has this high been taken out? Now, let me ask you this question, please. Help me, guys. Has this high been taken out? Now you answer this question if you can see my screen, right? Answer, please. Has this high been taken out? This high. This high. I mean, by that, I mean, as the market traded above this high, I'm trying to engage you guys, so please also engage with me, okay? That will be fine, okay? So just check. As this high, I mean, as the market traded above this high, that's my question. No, 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 no. Okay, all of you are saying no. See what I mean, okay, so that you understand what I'm trying to say. Okay, just one or two persons said yes. Now, after the market printed this high for us, this is the high. This is, let me mark it with the line. This is the high. This is the high. As the market traded above the high, the answer is yes. Watch now. All of this movement upward, upward, upward. It has smashed that high, right? So it has grabbed all of the liquidity above this high. Okay, so it has traded above the high. Trading above the high, we say the market have shifted, okay? And that shift is the first sign of weakness of the downward trend. So the downward trend is now weak. That means we might just be seeing USD pushing to the upside. So since we have traded above that high, above this high, we now have a new high. So this is now our new high. Okay, so the next target will be for the market to take out that new high. Okay, now taking out that new high, of course, that is how we come to the market now printing a higher high, higher than the previous high, a higher low, higher than the previous low. Of course, that is the definition of an upward trend. Okay. Now, thank you for that. So yes, it broke yesterday. Okay. So this alone is showing that we are having strength coming back, right, gradually into the dollar. Technically speaking, okay, we are having strength gradually coming back into the dollar, as you can see right here. Okay. All right, so since trend is coming back to dollar, let's analyze GPUSD, right? So we'll do GPUSD, we'll do Euro USD, we'll also do USD JPY, okay? So clean it up, okay? Now, this is GPUSD, as you can see. GPUSD, you cannot deny this. GPUSD is already rocking and trading to the downside, right? Now, remember, when we said the market has broken structure here, if you can remember. So by the time we broke structure here, we're already going to the downside. Okay, so just imagine for 1 second when we broke structure here, right? That was by what time? That was this same July, 19th of July. So since 19th of July, we have broken structures to the downside. Since that day till today, right? So the market has moved very well to the downside. Okay, so that's about 85 pips to the downside. Okay, so this is the reason why breaking of structure, knowing when the market have shifted from an upward trend to a downward trend is very important. So that you too, you can shift, right? You can shift and start taking trade in that same direction. Okay, now we're already trading downward from what we can see here. Okay, so since we are trading downward, the next thing would not be are we in the impulsive leg or we are in the retracement leg. So let me just do this for you real quick. So we have an impulse like this, then we got a retracement like this to the upside. Then we had another impulse like this that actually traded below this low. So you can see this low is actually below that low. Okay, so let's just use this one. Okay. Then of course, then we actually traded higher, as you can see. So you may want to do this on your chart. It will make you it will make life easier. It will make things clearer for you. Now, if you notice, we traded, we broke structure again, we form a new low, right? So for what we are doing right here, this is a high. This is a protected high. So until this high is taken out, by taking out, I mean until the market trades above this high, we are still going down. Okay, we are still going down. Now, I don't mean I am going down. I cannot go down in life. I mean the chart is going down. I hope you understand that. All right. On this analysis is on the H4 time frame. And of course, we saw a very big movement to the downside yesterday. And of course, the market trying to recover this morning. Okay. So that recovery the market is trying to do right now. So you should be able to define for yourself that recovery is actually a retracement. Very important. Most persons trade and they don't know whether they are trading impulsive leg or the retracement leg. It is very important to know whether you are trading the retracement leg or the impulsive leg. If you're trading an impulsive leg, impulse is the market is moving forcefully in the direction of the trend. You can afford to stay long on the market. If you're trading a retracement leg, a retracement is only a detour, or if you like, the market moving temporarily opposite the direction of the trend. So if the market is moving temporarily opposite the direction of the trend, you know, that particular kind of trade is not going to be a long trade. So this particular movement, right, is a retracement, as we can see. Of course, you can know at the end of the day, retracement can turn to reversal. Retracement can only turn to reversal if we have now done a market structure shift, or if you like a change of character. I mean, if the market have not traded above this high, but for now, we are seeing a retracement to the upside. Now, you can be able to trade this retracement to the upside, right? And with a very tight stop loss, knowing that you're trading a retracement. And of course, once you're in profit, you protect your profit. Guys, are you still with me? Once you're in profit, you protect your profit. So now let's look at the smaller time frame. That would be 15 minutes time frame. So this is so you can tell for yourself, right? So by the time you drop down to your choice time frame, to a lower time frame, you can tell for yourself that this movement is only a retracement. Come on, that makes trading very easy, right? Or that makes trading sweet like honey in the honeycomb. I'm telling you. So you know right now that this high is our strong high. Okay, this high is our strong high. Now, guess what, sir? Even now that you have dropped a much lower time frame, you can do another level of analysis. That level of analysis is you can draw the market structure again. Now, I'll just do this for you for GPUSD. The rest, I'll just run very fast, okay, to save our time, because time is not our friend. Now, since this is a retracement leg, so all of this movement upward, as you can see, it is actually a trend on the lower time frame, right? It's actually a trend on the lower time frame. As you can see, it's an upward trend, but you will not deny the fact that this upward trend is actually a retracement leg on the higher time frame, right? So if you're trading this trend and of course, if you're buying, right now, if you're buying GBP USD, you already know that this my buy is is I'm trading the retracement. So if you're trading the retracement, you want to be very careful, right? So number one, that becomes a high risk trade. So you should know when you're taking a high risk trade, sir. Okay, you should know when you're taking a high risk trade and a low risk trade. One of the things you do if you're taking a high risk trade, one of the things you do if you're taking a high risk trade is to maybe perhaps reduce your stop loss. And of course, you want to be more careful. Okay. So as you can see, we were just trading to the upside, rocking structures to the upside. I mean, trading above the highs, higher highs, right? And of course, we printed relatively equal highs here. And of course, this relatively equal highs has been taken out, right? Has been taken out. So of course, relatively equal highs serve two things. Number one is a place for manipulation. I mean, of course, the market will be attracted to it because liquidity rests above the highs. That is internal liquidity. And of course, if you watch, the market quickly took out that liquidity and of course, start trading higher, right? So the market took out this liquidity and started trading higher. All of these movements they are all retracement to the upside. Now, what can we do if we wish to buy? If you wish to buy, this is when you're going to use a very tight stop loss, right? It's very tight stop. Why? Because you know that you are trading opposite the direction of the larger trend. You say, please check USJPY. I am selling. You can see my own trade, USJPY. What am I doing here? I'm buying. I'm buying. And you are selling. Don't worry. I will check it to know whether. Okay, wow, this profit has increased. It means God is in Port Harcourt. All right, guys, let's continue. So we have done break of structure to the upside, as you can see. So break of structure means the market have broken structure. So anytime the market breaks structure, I wouldn't want to take my trade because that would be a high risk trade. So what I would like to do here, I would like to wait for a little retracement again so that I can do a buy. So if I'm buying here, come on. I know that I am trading the retracement leg, right? And of course, this high becomes my take profit. So, sir, if I'm buying anywhere around here, I know number one, I am buying on this short upward trend, right? I'm buying on this short upward trend. This becomes my take profit. And of course, this becomes my stop loss. So guys, I am done with you, GPUSD. I don't know why this time is on so fast. This is just GPUSD we have analyzed and it's already to 9. But see, and the way I do my analysis, I do it in such a way that even if we're not able to analyze plenty or so many instruments, by you just understanding this analysis, you can take it for yourself. What we do here, we teach you how to fish. Even though we try to give you fish, we also teach you how to fish, right? That means how to do this analysis by yourself, which is the best in the long run, okay? Which is the best in the long run. So as you can see, so you do a buy here, you put a very tight stop loss. So you can use this place as a stop loss, or you can use other low as a stop loss. Otherwise, we are rocking the downward trend, right? We are rocking the downward trend. We are rocking the downward trend. So if we are rocking the downward trend, and of course, once the market trade below this low, then I will start selling again. So that's one way you can sell. Another way you can sell is once you see a change of character somewhere here, I will start selling again. Okay. So the market is dynamic. You too, you have to be dynamic, right? You have to be dynamic. So I mean, if the market change, you change with it very fast. So guys, I think I'm done with USD JPY. Sorry, GPUSD. Let me do Euro USD, but somebody's already asking for USD. Somebody's already asking for, I think your name is not there, but you are Redmi. You're using that. That's your phone version. So let me just jump to USD JPY since you're already on it. So you say you have been selling since yesterday. Perhaps you have been selling since this yesterday. So let me do one quick analysis here so that you can see whether you hold your trade or you leave your trade. Okay, but let me just try and protect my profits. Okay. So that I will not be distracted. So what you do is if you have placed a trade and you can see small profit, you know that you are an intraday trader, you protect your profits, guys. So let me do this analysis for you real quick. So quick one here, on the H4 time frame, Mr. Okay, your name is not there, Redmi, right? So quick one here. So you can see this instrument was nosediving. So what I'm doing for you now is called market structure, right? The true character of the market is seen on market structure. That is technical analysis. So watch carefully. So supposing you did this kind of analysis I'm doing right now, Okay, by yourself, you can tell whether the market has broken structure is still going down or going up. So for what I'm doing right now, I'm trying to paint the highs and the lows. And of course, you know, those highs and the lows are the two characteristics of whether the market is going up or going down. Okay, so as you can see, so we have break of structure here to the downside, right? To broken structure to the downside here. So we had a break of structure there, right? So let me draw this from this low. So we got a high here. We got a high here, right? Or I think let's use this low. So we got a high here. Then of course we got a low here, right? So I think this same movement was yesterday. So yesterday we got the change of character, as you can see. So the market traded above the high, right? And of course, it traded above that high. Now that high was also above this other high, right? So then we got a retracement here to the downside, right? Then of course the market gave us another impulsive leg to the upside, till above this high. So let me come down to a much lower time frame so that it will make things much clearer for you. Oh God. So 15 minutes time frame, or if you like, we can do 30 minutes time frame to make things easier for you. So watch carefully. You will notice we have done change of character, right? I mean, the market have shifted to the upside. By that, I mean we have traded above these highs, right? We've traded above this high. So any retracement to the downside give you an opportunity for you to do a buy, right? So for you, you are still selling. You're selling because let's assume you didn't do this kind of analysis, right? So your stop loss, so you want to place a stop loss below this low, right? So since you are selling, rather, so these are the highs, as you can see. So the market have printed these highs for us, right? So you may want to know at what point. Now the market have shifted. So most person, what they do is they place trade without any stop loss. I want to believe that your trade read me does not have stop loss. So please, so this is the high, right? So if the market trade above this high, then you want to close your trade, okay? And of course, I know the market should trade above the high, right? So if it trade above this high, you want to close your trade, or otherwise, then of course, it can start going down again. But this high is very important high day, because once it trade above this high, it's another sign, or if you like, it's another show of momentum to the upside. So if we are rocking the market to the upside again, it means you may want to close your trade there, okay? So put your stop loss now. Put stop loss above these highs. So preferably put the stop loss somewhere around this area, around 154.412. So put stop loss around this area, 154.412, okay? Now, I think let's do Euro USD, or have you done Euro USD already? So let's do Euro USD quickly. So I think I've honored one request here. Let's do Euro USD quickly. So the European Euro. Come on, guys. Let's have it. Let's have it. Let's have it. So guys, Euro USD here. Let's look at what the market is doing on Euro USD. So let's do H4 time frame. This is H4 time frame, right? Now, you can see that still market structure, we already have a shift. Shift means we traded below this low, right? So see what I mean? Now, I keep repeating this thing. Once you grab it, man, you will see that it will change your trading. Once you grab it, it will change your trading. So this was the last low, called a strong low, right? Very strong, very strong, very strong. Why? Why is it strong? It's strong because it was this low that was responsible, or that is responsible for trading above this high, hence a strong low. Now that strong low, Once that strong blow is taken out, then of course we have shifted. So if you watch, we traded this way, okay, then we retraced again to the upside, and before you know it, pull, we smashed that low. So so that means we have moved to the downside, right? We smashed that low. So for smashing this low, we have moved to the downside, okay? But if you watch carefully, this market has been ranging, this particular structure is not really very clear, right? It's not as clear as the rest. Now, but in trading, sometimes you come across structures like this, right? So somebody will not say, Emmanuel, what am I going to do here? So this is the low. So this is the low. So I think we can now do a retracement to the upside here. Okay. Then of course we cannot deny this low. Now, but if you watch carefully, all of these lows are weak, right? So weak are really signs of manipulations. So then we traded lower again, right? As you can see. So overall, we are still rocking the market to the downside, right? We're still rocking the market to the downside. So let's look at 15 minutes time frame, guys. So overall, we are rocking the market to the downside, as you can see carefully here. Okay. Now, so this is a break of structure on this 15 minutes time frame. So this is a low, and of course, this is a high. This is a relatively equal high, so the market will later wants to come for it. But then we have seen a break of structure to the downside, right? Which you will not want to deny it, right? Then, of course, we saw a retracement to the upside. So, guys, I would like to jump in with the sell. So, that's a sell on Euro USD, right? A sell on Euro. So, you may want to also join me, right? You may also want to join me. So, I just did a sell, right? Now, the reason why I'm selling is number one, we analyzed USD index, right? When we analyzed USD index, we saw that it has already done break of structure on the H4 time frame. And of course, it's trying to do the next break of structure, right? To take out the external liquidity to the upside. So if you're just joining us, I think we already did that analysis, right? Before now. So I would like to put my stop loss here or even up here, okay? So I would like to put this here. Now, but then if the market comes up to this point, I might want to adjust it to this point, right? Remember the way I trade, I might want to take another position if the market gives you another premium price, okay? So this is a set, guys, that's a set. Now, I think we have done Euro USD, GP USD, USD, JPY. Now, let's do gold real quick, guys. Are you still with me or you guys are not with me? So guys, sorry, we lost the connection there. But we are back again. So check if you can still hear me. We lost the connection, but we are back again. So obviously from our analysis or from the way we analyze the market, you can tell that gold is trading to the downside, right? Gold is trading to the downside. By that, I mean, we saw this massive impulsive move to the downside. We saw this retracement up to the upside, as you can see. Then we saw another impulsive move that was responsible for trading below this low to form a new low. So this is actually a new low, guys. Then, of course, after this new low, normally we expect retracement now, So let me introduce a new tool. That would be Fibonacci. This is my Fibonacci. That would be Fibonacci. Now, this is the middle point, right? Of it, okay? So, but then the reason why I'm introducing this is that we have done a major movement to the downside. So we have done a major movement to the downside. I mean, we have done change of character to the downside. So normally we should expect the market to retrace. So retrace means we should expect the market to move a bit upward, right? Now, if the market did not retrace up to 50%, it's 1.8%. If the market did only 38.2%, that means the movement or the momentum moving the price downward is really a very strong momentum. So if it's a very strong momentum, then it simply means the market want to continue down. But then we have printed the retracement leg, right? We printed the retracement leg. So in this kind of scenario, we would like to drop down to a much lower time frame. That will be our 15 minutes time frame, guys. So this is our 15 minutes time frame. So that impulsive leg we did to the upside, look at it here. Okay, so this is a retracement. Okay, this is impulse to take out the high to form a new high. Okay, then of course this is a retracement on 15 minutes time frame, which is good. So guys, we have seen a failure swing. By that I mean we've seen that the market has failed to trade higher than the previous high. So then of course we have traded lower. So I'll be looking forward to sell gold from the analysis here. I'm looking forward to sell gold. So where am I going to sell gold? So I will sell gold once gold is able to trade. Now this area is a good area to sell gold, but I would like to sell when the market trade a little bit lower towards this level, right? So because look at this now. It's a very beautiful area to start selling. Come on. I'm telling you why. The reason is, remember, this is a retracement, but we are doing the retracement to the upside, which is supposed to be a mini upward trend. You agree with me? So, of course, it was actually a mini upward trend because this is the high, this is the low, this is a higher, this is a higher low. So, we're expecting a much higher high, but it failed. Then, of course, after that, we traded below the neckline, right? So I would like to do a sell on gold. So I've just placed a sell on gold there. So that's a sell on gold. Then of course I would like to take my profits around this neckline here. Then of course my stop loss will either be this high or this other high. So guys, you have been following us. We have placed. If you have been following this analysis, we have placed a sell on gold. We also placed a sell on euro USD. Okay, so those are the two positions we have taken. Okay, I think that's my USD JPY trade I've closed, right? Okay, which is good. I've been able to protect some profit there. So guys, that's a sell there on gold. Okay, you guys are still following me. I gave a surplus now. So look at the previous Ayanda Olusegun. Look at the so let me just call my own stop loss for you. My stop loss is 1.08618, 1.08618. Then of course my take profit is 1.08313. So I think we have done those instruments. So the next one we're going to look at is let's do US 100, right? But somebody said we should do DE40, right? So if you want us to do that, we're going to do that. So, but I think if you're looking at my trade here, I have a buy on Euro JPY, okay? I have a buy on Euro JPY. I already did this analysis before now. So those of you that wish to join me, of course, you can also join me. So, but let's do DE40 here. So DE40, guys. So this is DE40, guys. Okay. So let's do from the H4 time frame, guys. So my analysis, I like to analyze from the H4 time frame, guys. Okay. Now, if you look at it from the H4 time, it means you're trying to consider what the big money is doing. Remember, the market is largely divided into two: big money and small money. All of us in small money, let's gather one place. So all the retail traders are called small money. Okay. So you may want to consider what the big money is doing on the market. By that, you may want to now step up the time frame. So that's the reason why we're looking at H4 time frame. Of course, that's another form of top-down analysis. So we are considering the higher time frame. Then after that, now consider the lower time frame. Okay. Did you just buy good at current market price? What I did was sell. Okay. It was a sell I did. Then I put stop loss and take profits. Okay. So let's look at the analysis here. Okay. Now remember the highs and the lows, very important, right? So let me start from here. So we traded to form this high. And of course, we did a higher low here. Then we traded much higher to form a new high. Show of momentum, break of structure to the upside. Then, of course, we traded lower to take out this low to form a new low. Wonderful. That's when the market is very hungry for volatility. Okay, so sir, we have traded below this low. That's a shift, right? And of course, we did a retracement to the upside. That's up to 61.8% retracement on the Fibonacci series. Then, of course, then we traded lower. So now trading below this low, right, it's a shift, right? So that means this new low is now our target liquidity. This high becomes our protected liquidity. So guys, we have now targeted this low, and of course, you bear me witness, come on, that the market has not traded below this low. Two of us, that's two. So the market has not traded below this low to form a new low. Forming a new low, meaning that we have taken out this low. Now, of course, we'll be expecting a retracement to the upside, right? So now, technically, on the H4 time frame, guys, this instrument is on a downward trend, right? Technically, on the H4 time frame, this instrument is on a downward trend. So if it is on a downward trend, then simply put, if it's on a downward trend, then simply put, I would like to do a sell, but I'm not selling immediately, right? I'm not selling immediately. The reason is if you watch carefully on this H4 time frame, you will see what we call a bullish engulfing, right? Now, by bullish engulfing, I mean this big green candle, right? You cannot push it aside, right? It's a big movement to the upside, right? Of course, and of course, it's big enough to cover this other red candle. So that's bullish engulfing, right? So the sell may want to come in when the market have done good retracement to the upside. Then, of course, we see change of character somewhere here before we start selling, right? By that, we mean on this H4 time frame, you have to drop down to a much lower time frame around this area. So, sir, around this area, somewhere later today, you may want to drop down to a much lower time frame to see the market now trading lower lows on maybe 15 minutes time frame. So if you drop down to 15 minutes time frame much later, even 5 minutes time frame, and the market is trading or showing you lower lows, then of course you may want to start doing your sell. But for now, you cannot do your sell. Let me show you. 15 minutes time frame, guys. So this is 15 minutes time frame. So you agree with me, we are not seeing any lower low, right? So you must start seeing a lower low before you start doing your sell. Or you must start seeing a higher high before you want to do your buy. But you don't want to do your buy neglecting the higher time frame, guys. So from what you can see from the most recent movement to the candlestick zero, right? By candlestick zero, I mean the current candlestick is called candlestick zero, okay? So this is a low, right? Okay, this is another high. So this is a much lower low to form a new low. So this is a high that is trading above this high to form a new high. Okay, so this structure itself is a structure for an upward trend on this 15 minutes time frame. This structure. Now, can you see this movement? Down, up, traded below the low to form a new low, then traded above the high to form a new high. This is an upward movement, right? So, but then if it's an upward movement, two things you can do. Number one, I said we later we want to sell, right? But before the price gets to where we would like to sell, this is an upward movement, right? So one thing we can do, we can enter aggressively, because aggressively means you're trading at a high risk, right? So anytime you hear the word high risk or you hear the word aggressive, those two things are the same thing. They are the same thing. So you can do a buy right now, but that buy will be an aggressive buy because we have just done a break of structure, And after a break of structure, the market, right, would like to offer some discounted price, right, to attract more buyers. Okay, so you may only want to do the buy around this area. So two areas you can buy, sir. Okay, so you may want to do the buy if we have a retracement towards this level. So preferably we would like a retracement to a support. So we would like a retracement to a support level, and this area is a support level, right? So this is why you may want to do your buy. Otherwise, if you enter buy here, then of course that would be an aggressive buy, right? An aggressive buy, an aggressive buy. So guys, thank you very much, guys. Let me look at the comment section. So you're asking where is your stop loss for gold, right? So I think stop loss for gold, stop loss for gold can either be at this high, right? You can see my chart clearly. It can be at this high or at this other high, okay? At this high or at this other high. So two areas you can use as stop loss, right? So comment section, please. Sorry about that. So guys, I think the absence of any other question, we'll just round it up here. So guys, thank you very much. It's already 9. My name is Emmanuel. So I think we have CPI by I say CPI, PCE, personal consumption expenditure. We have PCE by 09026264507. So we have PCE by 130 today. Okay. So you want to have stop loss on your trade, okay? Such that that's the PCE might just push your trade. The PCE might just push your trade to either your take profit or even your stop loss. So that's why you need a very small amount of stop loss that is good enough for you, okay? So will the PCE affect D30, D40? Of course it will, because it will affect Euro USD, okay? It will affect USD. So guys, thank you very much. Bye for now. See you next week, Monday.